this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading. So you might be interested in that. Hey guys, I've got some thoughts about where the market's headed and what we're doing. Before I get into that though, I kind of need a little bit of help from you guys. So I've been testing something on the Pro channel and working on it, trying to get some feedback, and I need a little bit more assistance if you guys are, if you're up for it. So no pressure or anything. But if you go to the Crypto Influencers website, I have the free channel, that's the one where all these videos are showing up. But I also have this Pro channel, and this is the one where it's a paid subscription channel, and this is where you actually watch me make trades. So I talk about everything on the normal channel, but here I actually place trades right in front of you, and you can and I'm like talking through like why I think the way I think, and what I think might be happening next and all that, and figuring out how to hedge and how to be smart and risk manage and all those good things. But if you click on this, even if you're not a pro member, there is a tab called Affiliate Bounties. And if you click that, you can view the affiliate bounties for this channel, and you can actually create your own. So you can make your own custom thing. And so if you guys are, pretty savvy and whatever, it would be pretty cool to see if one of you guys stepped through just to see if you could figure it out. But this is the admin side, so it's not the side you would see. But this is just a kind of a, if you share my Pro channel with somebody who you think it would help them, they just get $25 off their first month. But if they stay a customer, you can either choose to get a one-time $25 referral bonus or $10 for the first year if they're still enrolled. So just kind of a thing I've been working out to create incentives for people to join the Pro channel. But I wanted to see if somebody could, kind of step through how to, just setting this up and see what their feedback is and whatever. So anyway, wanted to throw that at you and see what you thought. But now let's get into this market. This is Bitcoin. This is also the 5-minute chart, and I'm going to hide my face. Okay, for some reason, my voice was muted. Okay, look at this crazy chart. This is since the first of the year. And this is from the 5-minute chart. You can really see a lot of moves in crypto. And kind of right off the bat, you can tell on the 5-minute chart that when prices move, they've been fairly stable. Fairly stable. We have a sudden move. They're very stable. A sudden move. They're very stable. Now this was more natural. This is what you would kind of expect a free-flowing emotional market to look like. There's ups, there's downs. Everything is kind of moving and shaking and flowing. And then we kind of go back into it a little bit. So if I zoom in, you can kind of see what I'm talking about. This is quite a markup, and this is relatively flat. And then there's quite a markup, and then this is pretty flat. And then we've got this giant markup, and this has been very, very flat. Of course, you have a little dip here and there, but this almost looks manufactured. So where the daily candles are just looking crazy right now, we're way unidirectional. Actually, let me switch over to I hate when that happens. Hang on. Let me get it off. I was looking at kind of some shorter term trends. Let me move this off. Okay, so in other words, we're looking at these crazy moves, and you can tell that it's a little bit manufactured, right? And in fact, I think investors are starting to get a little nervous. Part of the reason why is because of the size of our wick. Once we start getting long wicks at the top of this, or if our candle bodies get large and then they start getting small, we can tell that there's a change in momentum happening. Well, the markets are getting a little interesting. So let me go back to the 5-minute chart, and I'm just framing this at a place where I kind of feel like this has been quite manufactured. I don't think this is a huge natural move of free markets. Suddenly people are like, you know what, it's time to buy Bitcoin and let's just do it. I think these levels have been quite. I mean, it's pretty picture perfect. In other words, and I kind of have a suspicion that it's fairly unsustainable. So let's go back to this 5-minute chart and let's look and see if there's anything that might be, kind of changing. First of all, we had kind of this flat thing. This is on the left. And then we had sort of a dip right before the move up. That feels a little bit manipulated or manufactured, because the second, you kind of scare retail out of their position, you push the price down, and then you emotionally move them the other direction. So that works for a while, and then you level off the market, and then you create another drop where people are like, oh, this move's over, I'm getting scared, we're going to get out of our positions. And then you have the next markup. So the drop is happening right before the markup. And this seems a little odd to me. I mean, it's not odd. It's only odd if we're looking for natural market moves. Markets don't try to scare you out of your position right before they move them up. Markets would naturally they would build in excitement and just kind of go up. So anyway, this one there's nothing really here except for we had a failed attempt and then we came back and then we moved. This was a lot more natural, but then same story. We have this drop right before the markup. And then this one's even more manufactured because as we've getting a little bit more volatile, but we had a pretty significant drop right before a very, very strong markup. And this was kind of a failed breakout, but we pulled back right before the next markup. This happened a little earlier on in the day. These ones, they're kind of happening, almost around the same time each day. That's what even makes it more interesting. It's like whoever's working these markets are creating these red zones right at around 18 o'clock. 18. Well, there's the 18 here, there's the 18 here, there's the 18 here. So this is very, very interesting. A couple of hours before the new day, we have this dip, and then we pull up, and then we're having our markup. In this case, we had our dip right here, and then a pretty significant markup. This one we pulled back, and then we really started going. This is starting to get a little rockier, though. You can tell that a lot of investors are like, I don't know if this is sustainable. It might be time to, if we're seeing weakness, I'm going to get a little more jumpy. And that's kind of what I'm looking at. So I'll put my face back in here so you can see my beautiful face. I'm just kidding. All right, so anyway, so now we've had a wild move. So this one was probably the least, it allowed it to drop the least. It was more of a failed rally that kind of got us started. And then sort of a failed rally before the start of a new day. And then this was a monstrous move up. We went up $1,000 in a single, 7 minutes. This is the biggest move by far that we've seen. And now we're just going flat as can be. And it's very curious to me that we had this natural drop, once the 100 got here. So we had enough time to kind of level off again. And then we had a pretty good drop. Like this would have been a an appropriate response to kind of an overbought market. And anyway, just little by little, whoever the whales just marched this right back up, and they marked it right back up to our line, right back to our trading range here. And then if people got too excited, we popped up, it was immediately shut down. And so whoever, like the group that's behind this move is very intent on taking things in a very measured way. So it's possible, it's very possible that we have another move to the upside. Even though I think they're having a harder time controlling it. You can see that people are getting jumpy. Markets are definitely getting a little more volatile versus what we've seen over the past few attempts. Like these tiny little markups, things are pretty flat. Even this was a pretty big markup, and it got a little wild, but the whales were able to maintain control, and then they kept it really pretty quiet after the next markup. Then even bigger markup, and this whole while I'm looking at the RSI on the daily thinking, wow, we are extremely oversold. Let me bring on RSI. Oh, overbought, excuse me. Yesterday we closed at 86.24, and right now, at the time of this video, we're sitting at 89. Like, that is unreal. So how the RSI works is it builds on momentum. It gets steeper as long as the increases are exponential. So it's less steep if the percent gain doesn't maintain. Or so in other words, yesterday we had a 5.73% day. Right now we're looking at a 4.93. So our percent increase has decreased. So that's why our RSI is starting to flatten out a little bit. But our average, our RSI wants to go to the 50. If we were to go sideways, it would just drop naturally back to the 50. So in order for this to continue increasing, we have to get bigger and bigger and bigger. And for it to stay a straight line, these have to double. And they are not anymore. We started off doubling, 1.5 to 3 to 5. So this was a little bit less here. But then we went 5 again, 5.73. It was still bigger percent-wise, but but that kind of started us leveling off. And now we have a day that's lower. This is our first day where our percent increase has declined. We're also seeing a pretty big wick. This candle closes in 3 hours, and there is a group or large whale or group of whales with similar trading ideas that are manufacturing this, because we would have likely fallen at this point. Like, this is pretty incredible. So, but I feel like the higher we get, the less control they have, because I don't think either other institutions or other whales or other individuals, retail, we're getting a little nervous about these. And if prices start to dip, there's more money pushing down, because there's a lot more people that could be jumpy to take profits, especially after the lessons of an entire year's bear market. So some people that are in the green are kind of like, I'm out of here. If we're showing any kind of weakness, I'll let this thing settle down before I get back in. But I don't know. If they've held this up so strongly and been so consistent with it all day long, because this is not, this is as straight as you can be. We had an attempt in the middle of the night, but they've pulled it back up and got more, regained control and left it at pretty flat all day long. So they still have complete control over this move. They have not let it fall. If they wanted it to fall, it would. And in fact, this would have been the start of it. So that means that there's probably another FOMO wick coming. But it's getting shaky. So that's kind of why I wanted to kind of talk this through with you guys and really kind of prepare you. Our resistance has hit right here. These whales, they may want to change the narrative. And if they want to, they need a close above this point, which is 21,300. If we get a close above that, then they have, some traders might look at this like, it's an insignificant point. I know it's a lower high, but it's so low that maybe it's not significant. Well, this one is not. This one is a very blatant, obvious point on this chart. Like there's no question. Nobody's going to dispute this. So if they wanted to create a higher high, that this would be a recipe for that. Getting a high, a close higher than this, and then allow it to come back and find any support, most likely on these major support lines, because this was our prior trading range. If they let it fall back to here and maintain control, because I don't know who might scare out as it drops, but if they were able to get a level of control here and establish it as a swing low, this could really change everything. A lot of hedge funds, big money, all of retail, everyone's going to be running into this. They're going to be putting as much money as they've got, because this is the structure that we've been waiting for a year. So anyway, I want you to be very careful. This is definitely a manufactured move, and people that are doing this are in the business of making money. They may or may not be diehard crypto fans. They may just be very smart about putting markets in a certain way to position themselves to make a ton of money. And how would you do that if you had the resources? You could really get something looking overextended, get all kinds of retail and whoever can FOMO in, just get them all excited, and then sell it to them, and then drop it back down and capture some cheaper prices, rinse and repeat. Like that's what these whales do. So we are crazy high, 89.22. That is it's hard to find. Like we did this yesterday, this exercise. Where did we get above that? Like, yeah, is there even? In the height of our most exciting moment of our bear market, 89.58 was the highest point of the most vertical move that we've seen during the bull market of crypto. That was the very highest. There were some in here that got pretty high, 88, 87, 89, and 90 right here. We had this massive 20% move, 17%. And then we just went straight up. We didn't quit. And that was crazy high. RSI was ridiculous. And you can see how just after a couple of days and a little bit of sideways, it melted us down from the 90 down to 64. So these things, they need time, even if you're ultimately, on a tear. There has to be some kind of a breath. And so what I'm curious to find out is, what does our first red candle look like? Eventually we're going to get a red candle. This is not just going to go green, green, green forever. What does our red candle look like? Does our red candle look long and ugly like some of these? When the market has kind of tried to build some strength, and then we could have a casual drop back down, so little candles, or we could just have a sudden, no warning, giant red candle. I'm not entirely sure what the end game of the people working on this is, but this formation makes me more nervous than excited. Like the excitement was the build up, and the structure was amazing all the way through here. But yeah, 3 days in a row of these giant moves where we've just blown through the 100, blown through the 200, blown through our long-term resistance. It's kind of like, if this was so easy to get through, how easy is it to get back there? You know what I mean? So just being cautious, and I'm looking at this. I feel like the longer the wick, the closer we know we are to this losing its strength. I'm betting, the midpoint is 20,600. So if you take the top of the candle and the open, and you find the middle of this bar, The middle of the bar is 20,600. If we close at just in this vicinity, it's going to be very bearish, especially after a move like this. If they can keep it in the top quarter, then we probably have another run on the table. Anything less than that, and we're probably going to have a pretty good fallout. But things could get very volatile. This is very deliberate, and they're trying to create as much energy and excitement as possible. And the way to do that is to have a very emotional move, and it'll be dramatic. Market's about to close in 2 hours and 40 minutes. So either right at close or the few hours after, we're going to see a lot of movement. And I hope people don't get too excited if the market decides to push it to 25,000 or something. Like if we just go absolutely vertical, I may double down. I might actually double down on my hedge and really go short because it's just not gonna. You just can't have a unidirectional move without getting the rest of the market to agree with you. Smart money doesn't like to be overextended, either on the way down or on the way up. They will always look for a place to create corrections or a foothold or some kind of support or resistance, something to help substantiate the move. Every single trader will tell you this is unhealthy if they know what they're doing. And so I love the move as far as, the crypto's getting in the news again and things are warming up. That's really cool. But I don't want retail traders, because that's my audience. I don't want you guys to get into a position where you've bought into the excitement, put a ton of money in at 22 or 23 or wherever we're headed, and then suddenly they just drop it out from under you, drop it down below 20, because that would be a huge psychological blow. And then you get scared out of your position and you've just given all that money to those whales. That's not what we want to do. We want to be buying low and selling high, not buying high and selling low. So anyway, I hope that helps you. It'll be fireworks though. I'm expecting. It's been quiet all day long, and with our 2 hours left in this market, will we get a fake out rally? Will we pop up and then drop back down and then do another markup? Just like we have been, recently. This was yesterday. Will we do this kind of pullback and then markup, or what's on schedule? But the tops of these are very volatile. Once we get into higher volumes and more volatility, a change is in the air. That can happen at the bottom. That can happen at the top. So be very aware of this behavior. These selling climaxes, they get very volatile, very emotional, really long wicks, lots of activity, and then you get whipped around. And same thing on the upside. Things get wild, wicks start showing up really long, and then we're going to get whipped around a bit. So it's going to be wild. If you have a long-term horizon, then you don't even have anything to worry about, because years from now we'll be way up in here and this will all just be a distant memory. But for those that have a trigger finger on their trading, try to keep it together. I'm just trying to point out what I'm expecting to happen. The chance of a retracement improves every single day the higher this RSI gets. So be ready. All right, guys, that's enough for today. I'm looking forward to your feedback. I'd love a private message if you just test that out on cryptoinfluencers.com, because you don't have to be a pro member to share my channel. And the link to that is in the description of my channels too. So all my videos. All right, thanks again. We will catch you all next Monday, since I don't trade on Sundays. I hope everyone enjoys the weekend. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.